All right, in this final video for chapter 2, we will be talking about the budget and how we can use it as a control tool. So the one thing that we're going to be looking at is our variance and how we use it in our operations to show how well we are meeting our budget. So our budget is a control tool. Again, remember, our budget is a plan where we want to be, how much money we want to receive in revenue, how much money we want to spend on expenses. So we budget all of that information in order to then have something to compare our actual performance to. So when it comes to assessing the results, we need to have two pieces of the puzzle. One, what amount did we budget? And two, what is our actual performance? So now we look at our income statement, we're comparing it against our budget. And so we have what we try to find is called our variance. Variance is just a simple way, another way of saying difference. Okay, so because we're finding the difference, we want to subtract, and we're going to do the actual minus the budgeted. Now, just like in our profit equals sales minus expenses, it's so important to always do the actual performance and subtract your budgeted, okay? The way I remember that is just alphabetical order. Actual minus budgeted, A minus B, okay? Now, when we look over here at our income statement, when we're comparing against our budgets, you'll notice that some numbers are in red and in parentheses, okay? That just simply shows that there is a difference in budget. Okay, so let's look at each one of these very closely as we go. So first, we have our sales. Okay, now our actual performance for beverages is $456,100. When we subtract the $482,000, we have a negative 25,900. Okay, that means we were short. That means we did not meet our budget for the beverages. So in this case, because we're talking about sales, because we're talking about actual dollar amounts, that means this negative number is not a good thing. Okay, it is not a good number to have negative in our sales, meaning we did not meet our sales goal. Now, if we look overall, we did, for our food and beverage, we did meet. We are in the positive side for that. But we didn't necessarily meet it on the beverage side. Okay? So now let's talk about cost. When we're talking about costs, our food, our actual, is $315,250. We subtract what we budgeted, $288,750, and we have an actual positive number of $26,500, which means we spent more money on food than we budgeted. We went over budget. And so that is why this 26,500 is in red and in parentheses, because that is a unfavorable number when it comes to variance. We spent more money than we budgeted on food. Okay, now let's look at our beverages. We budgeted $135,000. I'm going to change to a different color to keep this consistent. So we budgeted $135,000 and we spent $142,200. Okay, which means we subtract those two numbers and we have a situation where we spent more, $6,500 more on our beverages than we budgeted. Now here's a situation that we can look at, okay? Food, yes, we went over budget on food, but we also brought in an extra $75,000 over budget. So if we brought in an extra $75,000 over budget in sales, that means that we should probably have to go above our costs so that we can, prepare all that food. The issue that we have here is that we went over budget on our beverages, but we also brought in less money than we budgeted. Our sales were lower. That means we probably are giving away free drinks. Maybe our bartenders are over pouring the liquor, so we're not getting the same number of drinks out of each bottle of liquor. There's a lot of different reasons as to why our beverage expenses are higher, but our beverage sales are lower than they should be. So I don't want you to think that just because a number is in parentheses and is red, that it's necessarily a bad number. We have to put it into context, okay? So it's okay if we go over budget on our costs if our sales also reflect going over budget, okay? If we brought in more money in sales than we budgeted for. However, if we spend more money on our expenses, but our sales are not reflective of that, then that is a bad situation, okay? And so we can also look at our salaries and wages. So we went over budget. We spent $358,000, almost $359,000 on our salaries and wages when we budgeted $346,000. But remember, our food went way over, 75,000 over. And so because of that, we probably had to have more wages, more staff to serve the food, okay? And so that's one reason why we can use other areas to justify as to why we went over budget. So remember, just because it's in parentheses and it's a red number doesn't necessarily mean that it is a bad number. We just have to look at the big picture. So then we have to take corrective action. So I want you to think about, as we prepare for the class discussion, I want you to think about what are some ways that we can take corrective action if we realize that our beverage cost is much higher and our sales are lower. What are some corrective actions that we can take if we notice that our food cost percentage is starting to increase? Because what we don't want to do is let it become a major problem to where it's very hard to fix. We want to make sure we nip it in the bud as soon as we notice that there is a trend in one way. So I look forward to chatting with you all in class and having a class discussion about budgets in Chapter 2.